So welcome back to the channel. In this video, we're taking a look at Bitcoin and Ethereum, a real spotlight on Ethereum in this video, plus talking passive income as well. So stay tuned for all of that. And if you enjoy it, make sure you subscribe to the channel if you're brand new around here. So Darius Dale, these are one of the top follows in crypto in my opinion. So Darius Dale, Eric Krown, these kind of people, elite level, making calls on a consistent basis that are true, they're coming in correct more often than not, probably at least 9 times out of 10. These are the kind of people that I've been following now for some time and getting some really good insights in the market from. So we're going to look at what Darius is saying here and then try and blueprint that over what Eric Krown is saying as well. So Darius has put forward this just this morning. Good morning, God bless, reallocate your focus budget to the next play. So he's saying that the true lows are likely not in for markets, mainly talking about, of course, the wider markets, S&P 500 global markets, but also crypto markets as well. But he's saying watch for Bitcoin at around 23K as a price level, as a sign for a real risk on move. If we can break 23K, we may see some, bigger moves going forward and a lot of risk on assets, getting a bit more of the spotlight. So that's his takeaway from this. He uses the probable ranges. He and his team put out excellent research data on this, and this is an investment I'm going to make at some point, signing up to 42 macro. At the moment in time, I won't be doing that, but I will be doing that in the future to stay up to date with everything. But mainly when I'm back home, I'll be focusing 100% of my time into this stuff. But he is saying 23K, that's an area to watch. Now let's just overlay this with Eric Krown's data here. So he's put out numerous videos here showing previous iterations of moves in the market, these kind of bear market rallies, and when certain criteria is hit, we get these nice moves, and the average move could be somewhere in the region of 35% from the lows up to around 50% of the lows. And the target areas for these moves are currently here, 23.5K and 26.5K. So 23K, this is kind of the spiking the range highs here. That makes a lot of sense. This is where Darius sees, a potential reversal into a bit more bullishness here. But until we kind of break this kind of region up to this first line, so you got Darius saying 23K and Eric Krown saying up to 23.5K. This is kind of the first level at which we can really see the rally go to here. Over the next week or two, we could see 23.5K on the cards. It seems probable. Whereas 26.5 is kind of the upper bound of what Eric talks about. If you haven't checked out Eric Krown, make sure you do. I'll leave a link to his channel down below. But with confluence from two industry leaders here, we can see that it's quite likely that maybe the rally fails at around this first level, somewhere around 23K, 23.5, or maybe just some of these, spike highs here. We're kind of having 1, 2, 3 hits to the highs of this range here. Maybe we'll get a rejection once more, but I don't want to look at this with, things are going up quite a lot right now. People DCAing in the market at times when things are pumping. You want to set your DCA orders for when things are coming down, I would suggest. But of course, not financial advice, do your own things. But in the market right now, what I'm seeing is trade setups, but nothing more than that. This is not a trend reversal in my opinion. We are not ticking bullish all of a sudden. The macro backdrop is still going to dictate where we lead next. So kind of, this is where we can get, and this is in Max Bula Hopium territory up to 26.5K at this moment in time. Previous rallies, we've seen that Bitcoin has fizzled out before the higher ranges that people have been proposing. So, I would say this rally is probably very much similar, and it'll probably be 23.5 that we could come and tag, but a rejection around there would be something that I would expect. So Darius says, true lows not likely in. Eric Krown also reiterates that he doesn't think the macro bottom for Bitcoin is in as of yet, i.e. patience. We're going to probably have a long grinding sideways move at some point. Now the 23K region also correlates with the 200 weekly moving average for Bitcoin. So that is the amber line here, and we are pushing up to it once again. So would not be surprising if it rejects around there, and the bear market rally that we're experiencing right now could be over quite soon. So just things to bear in mind. I hate being bearish at all, and to be honest with you, I'm not actually bearish on the crypto markets over the long term. Hence, this is where I want to be DCAing in, allocating all my capital, all the spare money I can into these markets to really do well over time. We're going to talk about the strategy behind this in the coming moments. But let's move on to some Ethereum-based news here. So in this Tim Baker podcast, he talks about the ETH merge and actually gave investors a bit of a timeline as to when we could see the merge. That golden date, September 19th, potentially. So what does crypto need? It needs narratives. What has this market got right now? It has the narrative of the Ethereum merge coming up. So Eth 2.0 is going to be huge. This is something that I'm going to put into context for you in just a second as to how big it is and what it actually means. But why has ETH started to show signs of leading the market here, which it has really done? It's been outperforming BTC in the short term and brought the altcoins along with it. And I think Ethereum is the narrative right now that is causing the market to really play out the way it is with these epic little pumps. So ETH going through a massive rally over the past 6 days, increasing in a whopping 50% in US dollar terms, but up 25% against Bitcoin, which is pretty spectacular stuff. So Ethereum has just had its 9th shadow fork. It has to go through many of these iterations with test nets before it can officially migrate from proof of work to proof of stake. Another narrative behind this as well, that the move from proof of work, where miners can extract miner extractable value, but once we move to proof of stake and once the merge happens, it will be the validators that will be able to extract this maximal value. So this is where the kind of revenue changes are going to occur for ETH from miners over to those who are validators, i.e. stakers. So ETH 2.0 confirmed or not for September the 19th. This was around the 15th of July that this was posted about, Tim Baker on that podcast. And so the ETH weekly chart has really ramped up from around that period. So I think this is the narrative that's driving the market here. You can see some of the key dates on here. These are all approximations, but if everything does go smoothly as they are hoping, then it could be September 19th for the merge. On top of this as well, of course, a lot of people have been short in the market because it's a bear market, obviously. And as a result of this, at times when the market wants to mean revert, a lot of people get trapped on the wrong side of the market here and are still shorting when the market really wants a little bit of relief. So on top of fundamentals, we've also got the technicals playing out here with a bit of a short squeeze, with a load of shorts getting absolutely nuked here. So ETH, the leader in terms of price performance, up 22% on the weekly, they're saying, has led the charge with $250 million in total liquidations. So more than 160 mil of these were short positions, somewhat expectedly, they say here in this article. And the biggest single liquidation was 2.83 million. ETH is also in lead for overall liquidations over the past 4 hours on the micro scale, with 65,000 ETH getting liquidated, mainly to the short side. So in aggregate, 64% of the positions that were liquidated were short. So shorts getting wrecked here, a bit of a short squeeze, plus a nice narrative for ETH to really pump. So over the last couple of weeks, as we saw Ethereum coming down, May, June, into July, not looking pretty healthy here, we broke through our resistance, our second resistance, at around 5,500,000 sats here. And if we zoom in a little bit, you can actually see on this that ETH actually weekly closed below the second resistance, which was rather bearish. And in the same fashion that we broke through on the way up through the second resistance into the third resistance, just bypassing this, it looked for a time being that maybe on the way down we were going to bypass this resistance and maybe nuke all the way down to the first, which is at around 0.04 or 4 million sats. But ETH did manage to hold the line at 5.5 million satoshis and has had a nice pump from there. So the ETH merge pump is well underway. I think people may be a little bit offside in their trades. People want positioning for the merge. It's maybe happening a bit faster than many expected. As we know, the ETH timelines are always well off. And if you look back at the Ethereum white paper, they thought they would have proof of stake under wraps within like a 2-year time frame. ETH pumping nicely against Bitcoin, 0.067, so 6.7 million sats right now. ETH looking rather bullish. Now, if we just put this into different terms, This is how I like to look at things from time to time, see things in different lights. If we just look at general market caps of fiat currencies here, so you can see these are priced in BTC terms. The most circulating supply of any currency apparently is the Chinese yuan, second the US dollar. Bitcoin actually comes in terms of all global currencies as the 26th biggest currency out of them all, just below Poland and Sweden. So when we look at the crypto size of these projects, of these coins, BTC is the 26th biggest currency in the world, which is just crazy to think about and to fathom. But if you price ETH, and we just go to the ETH chart here, ETH is currently around 8 million BTC in its total market cap. So this would actually position Ethereum in terms of all global currencies between Qatar and Colombia. So you're looking at the 37th biggest currency on the planet, which is just mind-blowing to think about. That is how big Ethereum is. So the move from proof of work to proof of stake and the potential for this currency to become deflationary long term is something that can't be understated. It is very important to wrap your head around that. All of these currencies are massively inflationary. Some of them are even hyperinflating right now. Bitcoin's annual inflation, I think, is just over 1.1%. But ETH going deflationary, when you think of it in terms of global currencies, this is how big it is now. So just something to think about, like the markets we're playing in here are nothing to be underestimated in terms of their size. So another trader I do enjoy consuming content from is Pentoshi. He is bearish on things right now. You've seen a lot of people LARPing online on Twitter, suggesting Bitcoin is going to melt faces, go up to maybe 35K as he's saying here. You've seen this play out time after time. It's been going on for 8 months. We know it's a sad ending, and he's saying that after these bounces play out, he probably won't be trading too much. As he says, he thinks we're likely to, really meander, volatility to fall off a cliff and just drift downwards and have a very boring market for an extended period of time. And if you look back at all previous bear markets, that is what happens. We just go into this malaise, boring period, and that really is the DCA machine firing up time. That is where the real money is going to be made. So just everyone's 2 cents on that situation. I kind of agree with this sentiment. And just for a laugh, you have Jim Cramer also probably going to nuke the markets here with a bad omen. He's actually ringing the bell at the New York Stock Exchange tomorrow. The last time Cramer did this, stock markets went down 30% in the next 10 days. So could this repeat? Potentially. Now on to passive income talk. So these are some of the DeFi protocols that are generating large amounts of revenue, and this is where my focus is going to be. Over the last 180 days, LooksRare actually posted platform revenues of $500 million over the same period. OpenSea 350 million, DYDX 22, and if we just go down the charts here, you've got some well-known names like Curve posting up $28 million worth of revenue, Synthetics 17, GMX $10 million. The point of this being a load of these protocols are generating large cash flows, and you can get a slice of the action by holding and typically staking these tokens. So looking at the market from a different angle, rather than buy stuff, hope to trade it, realize a profit, a note of capital gains, buy low, sell high, which most people are unable to do due to the fact trading is very difficult, and it is you versus absolutely everyone else out there doing the same thing. We're going to start to look at the market in this different way. Revenue producing assets that pay you essentially dividends for holding them based on their performance, i.e. how much users they have and how much cash flow they are generating. So one of the ones we've talked about previously is QiDao, MyFinance, and they've had some really nice payouts as of late in terms of just getting quite a bit of, I think, like 234 Qi in rewards here most recently, which is not bad. It's a decent little bit of pocket money, if you will. But these kind of platforms can grow into something special in the coming weeks, months, years, however long it takes. And if you can establish a large core position in these, then over time they're going to continue to pay out revenue on that dividend basis. And this means you are genuinely getting passive income over the lifespan of these protocols. The most important thing being Lindy with these, they need to survive multiple market cycles. We're going to go through a large bear market now. Are they still performing? Are they still paying out? And if the answer is yes, like QiDao, and I'm happy with my position in this, a lot of people will be like, it's down from when we first talked about it or whatever. everything's freaking down. But this is actually performing, it's generating revenue. Most tokens that I've bought in the past don't do diddly. So what's going to happen when we turn bearish? Everyone's going to sell. There's no reason to hold things. But if they are paying you a payout, you're getting some revenue, there's a reason to hodl it. So if we just look at the month of June here quickly for QiDao, they made $730,000 in revenue. The market cap during this period was roughly $20 million. It's now up to 30, getting a bit of a pump. Thank you, Ethereum and the wider markets. But essentially this just means the payouts that we're going to get will have a higher dollar denominated value. But they're making money. So almost $1 million made in 1 month by a protocol with a market cap at this time of 20 mil, now up to 30 mil. That's a lot of revenue from a small protocol here. So these are the kind of diamonds in the rough that I'm looking at, and ways to generate long-term passive income. And you would never need to sell these assets. That is the whole point of this. You'll be able to stack them more and more and generate even more income over the long term. So if that is interesting to you, if you like this kind of revenue sharing model, this is what I'm going to be going into more, and this is my direction into the market, which I've been thinking about for quite some time now. So I hope you are on board with that. If you are, make sure you're subscribed, and I will see you guys very soon. Let's watch out for these levels. Enjoy yourselves. See you in the next one. Goodbye.